Wells Fargo has experienced major selling pressure once again despite a generally strong earnings performance. But the combined impact of heightened market jitters and continued negative financial headlines about executive mismanagement may create an opportunity for dividend investors. Perhaps Wells Fargo's worst days are in the past, so maybe it's now time to take a look at Wells Fargo once again. As a dividend investor, I try to take a contrarian approach that still respects conservative money management techniques. And this is often easier said than done. However, there are certain market contexts which appear problematic on the surface, but prove to be profitable opportunities at a later date. And the recent downtrend in equities this year has created such a context, as this came in conjunction with another round of negative financial news headlines for Wells Fargo. To be sure, investors that are long the stock face tough decisions here with valuations tanking, record fines being levied, and a severe public relations problem that does not seem to be going away. But with the earnings reports showing broad-based strength throughout the sector, I feel that Wells Fargo deserves another look. Over the last 3 months, Wells Fargo has taken a serious tumble and the stock is trading lower on a year to date basis. This puts Wells Fargo near the lows from last September. Wells Fargo posted quarterly earnings that were well above the market consensus expectations, with adjusted earnings of $1.16 per share versus the $1.07 expected, and revenues were roughly in line at 22.05 billion versus the slightly higher 22.38 billion expected. But markets may not have priced in these performances with the upcoming $1 billion penalty payout for Wells Fargo. But the posted profit numbers from Wells Fargo still show a 17% gain relative to the same quarter in 2016. And this should not come as a surprise given the relatively good earnings performances that the banking sector has seen as a whole. And the U.S. banks are now seeing their strongest earnings per share performances since the great financial crisis. And this chart here shows the Financial Select Sector Spiders ETF, and it's the XLF. And as you can see, the current price, overall price of the XLF, is reaching the peak that was last seen in 2007. So the question is, are we going to see a breakout here, or are the prices going to reflect back down? Taking a look at Wells Fargo from a different perspective, here is a table of the 6 largest U.S. banks listed by total assets and sorted by the return on common equity, or the ROCE, and this is reflective of the first quarter. So it takes into account all the recent negative news that you've been reading about. And as you can see here, Wells Fargo places fourth behind J.P. Morgan, Morgan Stanley, and Goldman Sachs, and then ahead of Bank of America and Citigroup. And also what is interesting are the last two columns, the EPS, the price consensus 2018 EPS estimate. Wells Fargo comes in at a decent 10.9, and then the current dividend yield, Wells Fargo has a relatively healthy 3.8% dividend yield. But let's go take a look at a longer perspective. So this is the same chart as the prior chart, with the exception that this takes into account the full past 5 years, and a different story emerges here. Wells Fargo has been the strongest performer of the group during each of the past 5 full years, but it has the second lowest PE valuation. It's trading only slightly higher on a PE basis than Citicorp, and Citicorp was the worst ROCE performer among the big 6 banks listed here. And Wells Fargo, though, is still being scrutinized by the regulators, and the regulators have restricted the bank's growth and ousted some of the board members. But The restrictions on growing its assets will mean even more excess capital for Wells Fargo, which perhaps can feed more stock buybacks and perhaps a higher dividend payout. And also, very important, if I'm correct, and we do have a stock market event coming up, this may leave Wells Fargo in a better capital position than the other banks. And to me, that's real important. So now let's go take a look at the price charts. This is the 20-year monthly chart on Wells Fargo, and the symbol is WFC. For disclosure purposes, I do not hold any position in Wells Fargo at this time. Looking at the price chart here, we can see that the price is resting right there just above the 50 EMA, below the 20 EMA. And if you go back into history, you can see that it trades generally above the 50 EMA and even above the 20 EMA. So we're getting back to normal trading, at least as measured by those moving averages. So that's the theme here, is we're getting back to normal trading levels on Wells Fargo, and I like that. Here we see that the elevation of the MACD was way above here. We're now in a more typical trading range between the 0 and the 2, moving on down here towards 0, but not quite bottoming yet. So it may be a bit early, but at least we're getting into the normal trading range, and the histogram shows that we're declining as well. Momentum indicator did go below 0, but it's hovering around the 0 line, at least for right now. Moving into the price rate of change, same sort of thing there as well. In the relative strength index, a moderate 44.45, and I like to see that. You go back into history and it trades in between these lines here all the way back. Into the stochastics, we're below the 50, still heading down, so it looks like we may be a bit early on that. Volume looks fine, and in fact, I like the pickup, the slight pickup here in the last couple of years or so, as opposed to say 2014 and 2015. So that's somewhat favorable. Williams heading on down here, so that's fine. Going back up to the price chart. It looks fairly healthy, even though there's a lot of negativity around Wells Fargo right now. I like the fact that it's getting back to those normal trading ranges, and it's below, I would say, even those other banks in its sector. Some of those have pretty lofty valuations. And then, of course, the overall market is pretty well elevated. So I like the fact that Wells Fargo is getting near traditional trading levels. A little bit early right now, but still it's becoming somewhat reasonable, and especially if they can get rid of all of that negative activity, then Wells Fargo is a stock that you may want to take a look. It's on my list for strong consideration. So for you, I would recommend further technical, but certainly fundamental analysis. So for today, that's ChewDog Charts. Thank you.